All right, good morning, everybody. I'm Greg. You guys probably know who I am. If you don't, you got my email, so you know how to contact me, right? So basically today we're going to be talking about two main things. Number one, as I said on the email, how to earn more money. Number two, how to keep it, right? Because right now it's all about taxes, right? And we've been talking about three tax things always in real estate. And with regards to as a realtor, there are three main taxes you need to know, right? Number one, we've talked about property taxes, right? How to save on property taxes this week. They'll be recording of all these three things added on to by this weekend. So property taxes, you should know Prop 8, 13, and 19. Okay. So if you just Google that, go on the internet, you should learn about that. But I will have resources for you guys by probably by Sunday. Okay. So you should also know, homeowner exemption, right? How to get that $7,000 homeowner's exemption if it's an owner-occupied property. Second is you should know how the homestead law in California works, where if you get sued, they can't force you to sell the property without giving you some money to walk away, right? So if you get sued, right, you're going to get part of your equity. And if you don't have any equity in your house, they can't force you to sell without giving you that certain amount, right? So, all right. So that's with regards to property taxes. The second thing we've talked about is capital gain tax. What happens when you sell? So we covered that yesterday, right? So with regards to real estate, right? When you talk to your buyers, right? What tax do they pay? Nothing. When you buy a house, there's no tax you pay. You only pay taxes when you sell, right? So in that case, you got to know about Section 121. That's the $250,000 exemption that we all know about, okay? Okay, so in case my screen's going nuts, just disregard it. Okay, so that's Section 121. So you should know Section 121. We all know about the $250,000 per person exemption, right? You can exclude the first 250 of profit. We've talked about if you're married filing joint, you can deduct up to 500,000. Instead of remember the 500, just remember 250,000 per person. So if there's three people on title, if they can qualify by owning it for at least 2 years, all three or all four, and they've lived there as their primary for the last 2 years out of the last 5, they should be able to qualify under Section 121, right? If you're an investor, you should know about 1031 exchanges where you're deferring taxes, right? Okay. Then we've talked about what can you deduct, right? So the deductible things, if it's your primary or your second home, right? You can deduct the interest of the first $750,000 loan amount, right? So just remember the 750, right? And then property taxes up to $10,000 only. Before it was $1 million and it was unlimited on taxes. So people in Atherton, like Stephen Curry, he bought a $40 million property. How much is taxes do you think he's paying? Like probably about $125,000 a year. Prior to 2018, he could deduct the whole thing from his income. Now he can only deduct the first 10, if that, right? Like for me, our taxes are over 10, so I can't use the other, taxes that I used to be able to deduct, right? Because if your property taxes over 10,000, you can only deduct the first 10, right? So remember that. So the interest on the first 750, and of course, the taxes on 10,000. Okay. Now, today we're going to talk about what. Hold on. Today we're going to talk about your income taxes. That's the third tax that we have to deal with, right? So we talk about property taxes, capital gain tax, and today the most fun part is how to make your life tax deductible. We're going to talk about how to lower your income taxes. Okay, question?
Yeah, I don't see any shared screen. Are you?
Okay, yes. I'm not sharing any screen yet.
Okay, got it.
Right. Okay, thanks, Jenny. Okay, so because we're going by memory, right? But I will share the screen. Okay, so that's what we're going to be talking about, right? So let's review what we've been chatting about this past week from what I've told you, right? Okay, on your screen now, you should see understanding property taxes, right? Right? Jenny, you should see that, right? There's my contact info.
Yes, I see that.
Right? If for some reason you guys don't get the stuff by Monday morning, hopefully you'll have it before that. Just text me. Greg, I didn't get your stuff, right? But basically you'll get all the slides that you see today, plus some other notes. Okay. And it's going to be up to you to read the email, download the materials, and watch the recording again if you have more questions, okay? So what we've talked about, right? We've talked about when our property taxes due, right? November 1st, delinquent December 10th, right? We all know that, right? So the second half, right? February 1st, April 10th. This was in your exam, right? For some of you guys who just got your license, right? This is what we call, I teach you guys acronyms and rules. So no darn fooling around. NDFA. So the first half is ND, right? November 1st, December 10th. Fooling around with regards to property taxes, February 1st, April 10th. Easy? No darn fooling around. Easy to remember? NDFA, right? Okay. So if I wake up tonight, hey, John, what's the acronym, right, for property taxes? NDFA, right? You should know this. Again, it's a 10% penalty. That's a big amount. You miss it by 1 day, 1 hour, right? You have until midnight to do it online. Okay. The county tax collector is not open at midnight. Okay. It's not like the tax filing. Just do it, online. But you have to pay a fee unless you use a check. All right. So we've talked about that. Let me start my screen here. Hold on. Okay. What happened? Okay. All right. So, all right. Now, how are property taxes determined? Basically, it's what you paid for it, right? Now, if Divya, she's my sister, she sells her house at 50% discount to me, right? The county still will tax me at current market value. That'll be your starting point. Doesn't matter if you got it for free, okay? Now, there are exclusions to that, right? Prop 19, right? If she was my mom, right? If someone was my mom, my grandparent, right? There's a parent to child transfer where you can move the tax assessment, okay? So again, all of this, you're not gonna get in just this presentation. There's gonna be some other materials and then more Q&As, okay? Somewhat like that, but not, you have to be careful. Again, this is if a parent gives or sells the property to their kids, right? It's because it's parent to child or grandparents to grandkids, right? They can move that tax assessment. It's not the tax bill, it's that tax assessment. So if let's say, your grandparent, has a house in Atherton, Steph Curry is your granddad, right? He says, hey, I like you, right? I'm going to leave this property to you, right? So if he bought it like 40 years ago, which is relative, some people who bought it 40, 50 years ago, this is not too far along, like 50s and 60s, you could have bought a house in Atherton for about $25,000, $50,000, okay? Now it's, more than that. It's at least 5 million minimum, right? But your taxes of what it started for, right? If let's say it was 25,000, it would have only gone up 20% per year. So if you do the math, your tax assessment will be under 100,000 as of this point. But because Steph Curry bought next door, he's paying 40 million on taxes when you're still paying based on $100,000. That's Prop 13. So read up on Prop 13, okay? So Prop 8, 13, and 19, you got to know this. It's gonna be on the handouts or on the attachments on the email. But with regards to property taxes, you need to know 5 things as a real estate agent. Prop 8, Prop 13, Prop 19, okay? Clients are gonna ask you. And then of course, you gotta know about the homeowner exemption and you gotta know about the homestead law in California. Remember, these are all California stuff, okay? Now, the homestead law, you read up on it. Okay, so know what the difference is, okay? And then with regards to, so let me just finish up with this slide, which we've been covering, okay? Okay, taxes for each city is different. Everybody pays a 1% to the county. Everything else after that, it depends on the city, okay? Because some cities will have their garbage fees included in there. Some will have lighting fees, right? Right. Some of them will have, like it says here, mosquito abatement, right? There's gonna be different things. There's gonna be school bonds, okay? For instance, in Union City, Ours is like 1.21% on the blended scale, right? Newark is like 1.18, okay, because we have less, some of those things have fallen off. You go to Mountain House, you're probably about 2.2. San Ramon, Windermere area, Gale Ranch, you're like 1.81, okay? Because there's other stuff included in this, in the property tax, okay? We're only talking about tax assessment here, okay? It's what your tax bill is based on, right? Again, if you have more questions, if you weren't in the class before, just watch the recordings and it'll make more sense, and then come back with more questions next time I see you, right? Of course, supplemental tax bill. You should know what this is, okay? Again, there's some information on all your training materials about supplemental tax bill, because if you buy a house where someone has owned it for a while, escrow will only collect based on the old tax bill. So if you bought it for a multi-million dollars because, you know, that's what the market value is, you're going to get a supplemental tax bill. You pay what you're supposed to pay. There's no such thing as free stuff, right? We've talked about that. Even in real estate, there's no such thing as free lunch, unless someone is doing it for a brokerage. But even then, someone paid it, right? Someone always pays, right? Okay, so there's no free stuff. Even the air you breathe is not free. We pay sales tax on our air that we breathe to here. You know that? To be in America, we pay sales tax. So you're paying, yeah. So someone said, what? Yeah, you're here, you're paying sales tax. You're here, you're paying income tax. So there's a tax you're paying to breathe the air that you're breathing. Okay? You go to the hospital, you know, they give you oxygen. They charge you hundreds of dollars, right? So, okay, air is not even free, right? So, right? So we talked about Prop 13, right? Okay, yeah. So I'm gonna leave the screen now. Okay, again, because this is what we've covered. What I want to talk about now is let's review the other one where we talked about capital gains. This one, right? So now on your screen, right? You should see capital gains tax, right? Zoom world, right?
Yes.
Okay, capital gains tax, right? So we talked about this, right? Interest only on the first $75,000 loan. It used to be $1 million and up to 100,000 on a HELOC. Now the HELOCs, you know, home equity line of credits are no longer there. You used to be able to deduct another $1 million or interest on the next $1 million on your second home. Now it's $750 total. Okay, got it? Okay. So what's not deductible is all the other expense. You want us to be deductible? Convert it into a rental, right? Okay, because if it's an investment, anything you spend on the property is tax deductible, and we're going to talk more about that, you know, in about a few minutes. Okay, so if you have a vacation home, right, can you deduct your expenses? No, because it's a vacation home. It's personal use. You can only deduct the first two of personal use. So you better convert that to like an Airbnb and stay there part of the time so you can deduct stuff, right? What about third home? Nothing. Not even the interest, right? So if let's say your loans are both the first, second is paid off, but you have a third home, you can't deduct anything. Got it? Okay.
The property tax is up to $10,000 if all the homes combined, or each
The
home
first two. Yeah, this is all combined now. Again, this was to help the rest of America, not the Bay Area. Okay, unless you're outside the Bay Area, right? So again, here's the thing though, right? Okay, that 750, it has to be to where that's the original loan or original loan amount. So if you decide to pull cash out, like make it like an ATM, you know, your original loan was only 500 and now you want to refi to 750, that extra 250, the interest on that is not supposed to be deductible. Yeah, okay?
So it's only on the first.
Yes, okay? Because it's supposed to be your original loan, right? Okay, got it? Okay, because if you get money, then that's income, right?
And it's not the person technically takes care of the investment or.
Okay, there's three types of homes: primary, personal use, and investment. And there's the worst kind, extra.
Vacation.
Vacation homes, third and fourth homes, right? That's why if you look at the rich people, they don't have loans on their third and fourth homes. They may have some on their first and second, right? Or better yet, talked about this yesterday in class, right? You put it on a corporation. We'll talk about that later on how to make it less, right? How does Elon Musk, how does Donald Trump do it, right? All those rich people, right? There's different reasons, okay? We'll talk about that.
Yeah.
All right, okay? Because some people say, well, which kind of corporation should I do, right? Computer is going crazy here. Okay. All right. Okay. So next. All right, we talk about capital gain tax, right? Okay. How do you determine? It's basically profit. What you sell it for minus what you bought it for minus expenses equals net profit, right? Or gross profit, right? Got it? Okay. Now, there are three rates you need to figure out, right? There's a 20% federal up to. It could be 15 or 20. It's 0 if you have no profit, okay? California, it starts from 7.3 to 13.3, okay? 13.3 is like if your income and the profit is at least $1 million total, okay? Healthcare Tax Reform Act, technically, this is after $250,000 of profit/income. There's 3.8. So we tell our clients, when you're selling a property, please talk to your accountant about these taxes, right? This is on primary, okay? Right? Okay? I have a bug on my computer. It keeps coming up. Okay. All right. Okay. So again, how is it calculated?
I'm sorry, to say how much is gonna be taxed if you sell your property. For federal, it's 20%.
20?
Right, or is this whatever gain?
Whatever you gain. Remember, whenever you in the United States of America, when you get income or you make money, profit from the sale, you will be taxed. Unless you find a way to reduce it or eliminate it or defer. So you're gonna pay sometime. Hopefully it's after you're dead. That's what deferring comes in. You let your heirs deal with it, right? Because that's how they do it. Okay, that's the best way. Don't pay more taxes than when you have to, right? So this is how we make our life tax deductible. Fun part, right? Okay. All right. So we talked about basis, right? Again, this is going to be in the recording. This is going to be on the notes this weekend. You should have it. Okay. Huh? Okay. Some of you guys are looking at a different screen. What do you guys see how capital gains are calculated, or no? No.
Greg,
Okay.
you can only see the cover page.
No, we only see your cover.
All right. Thank
cover
you.
page.
See, you guys, Zoom roll. You guys gotta speak up. Thank you. Somebody spoke up. All right. Yeah. So let me repeat.
Sharing the slides or talking about
Yes, you will get the slides. You will get the slides.
Okay.
You will get the slides. Okay. Let's see. Where was I? Okay. All right. So you guys know about IRC section 121, right? We talked about that. Okay. That's the 250, 500,000. It's pretty popular, right? This is where the 2-year rule comes in. Okay. So you guys own and live there for at least 2 years out of the last 5. Okay. Stop share. Share my screen. How about now? Do you guys see IRC 121? No. Jay.
We can see it.
Yes.
You guys can see it, right?
Yes.
Okay. All right. You guys don't see it here. See? Okay. All right. Since we're having issues both here and there, I'm just gonna close this out. Okay, you guys gonna have to listen to me. Okay. All right. Yeah. Yeah. Technology, it's not as good sometimes. All right. So, as I was saying, make sure you know with capital gains, you need to know Section 121 and 1031 exchanges, right? Okay, that's where if it's an investment property, you can sell and defer your tax, right? When? Whenever, right? Whenever you sell it and cash out. Remember, that's what we call realized gain or unrealized. When I defer, I have not received anything. That's why we use a 1031 exchange company, right? Because the moment I touch the property or the money, I will be taxed on it. All right? Okay? So now what we need to figure out is how to eliminate some of that income, right? So before that, though, let's quickly talk about how to make more money, right? There's 4 words that I share that you guys must have: mindset, motivation, skills, and action. Huh? I don't have it. It's just going crazy right now, but it's okay. All right, just remember, right? Okay, it's being recorded, so right, it's recording, so you guys will have this. All right, all right. Yeah, remember mindset, motivation, skills, action. That's how you're gonna make more money in this industry. Okay, so we're not gonna talk about door knocking tips. We're not gonna talk about what's the best script, things like that. What I want you guys to figure out is mindset. What I mean by that is, so there's a worksheet I share. It's called the 5 pillars of happiness, right? I've given this to you guys. It's in the back if you guys are here. But this will be part of our assignment, okay? So I learned this a long time ago. If you don't have the mindset of a strong agent, or you want to become a full, like a professional agent, it's not going to work. So what I mean by that is everything starts with a thought, thinking, right? What are Zig Ziglar, some of you guys may know him, talks about, are you suffering from stinking thinking, right? Do you need a checkup from the neck up, right? Okay. So mindset, with David's class on Thursdays is very important. Mindset is really important because when you wake up, what is the first thought that most people have? I want to go back to bed, right? I'm tired, right? No, see, what happened last night was what happened last night. That was your choice. When the alarm hits at 4:30, 5 o'clock, 6 o'clock, 9 a.m., whatever it is, you said you were going to wake up at that time. See, that's the first step to me. You need to set a time when you're going to get up in the morning, right? So one of the things I work with you guys is create that perfect schedule. What is a perfect schedule for you? You can't control what happens last night, technically, but you can control what time you wake up. So what's more important, what time you wake up or what time you go to bed? No, what time you wake up, because you may never wake up. So plan on waking up every morning. Well, I don't know. That's why I have an alarm, right? But I wake up before my alarm. So understand this, right? Be excited for your day. So when you get up in the morning, jump out of bed. If you have someone next to you, shake them up too. Hey, wake up, whatever, right? I mean, it's up to you, right? If you don't have anyone to wake up to, get somebody. Just kidding, right? So in some of us, we text each other, good morning, just to tell them we're awake, right? So if you want to create accountability, text someone, create a group. Just say, good morning, I'm up, right? Whatever that time is. You guys set up different times. It doesn't have to be the same time, but it's what you said, okay? So create that perfect schedule, right? And have that mindset that you want to be successful. So you can take the skills, right? We'll talk about that another time. But remember that, perfect schedule. So these pillars, right? Right? This is what you're going to do with the money you want to earn. So one of your pillars, so there's 5 things in here, right? What are they? There are 5 things, okay, on this sheet. Some of you guys should be in my class, Zoom world. You should know these 5 things, right? It's in the back. Right? Okay. Right? Friends and family, number 1. Right? Friends and family, financial, right? Fitness, faith, and fun. Right? So what I mean, you need to set up short-term goals, 12 months or less, medium-term 2 to 5, long-term 5 years and up, right? So my homework for you is to do this, okay? This assignment, okay? Is to start thinking of what are you going to do with your friends and family in the next 12 months, 5 years and up. What are some of those things? Right? Short term, medium term, long term. 3, 3, and 4, right? Hopefully you have 10, 10, 10 in each of these items. Goals. Okay, so when we talk about mindset, I need you guys to set goals. One of them is finance. What are some of your income goals? When you guys should have one. How many deals, how many listings are you going to do? That's your business planning, right? Intero's year already started October 1st. Okay. Is your business plan done? Right? Your schedule is part of that business plan. The schedule supports the business plan. The business plan is supposed to get you your goals. But if you don't have goals, what are you going to do with the money? Are you really going to be following your schedule? I don't know. Right? So again, this is where, as a professional salesperson, as a professional business person, you need to create some goals, right? Like how much profit do you want? How many rental properties do you want within the next 5 years, 10 years? That should be in here. Because you need to set a goal to, I need to get some down payment money. I need to have some income so I can qualify for that loan. Right? So what's that income? Have you spoken to a loan officer to say, hey, how much income do I need to buy $1 million home? I mean, what type of house do you have? What kind of house do you want, right? So with regards to mindset, right? Think about it, what it is. Then you got to create that motivation. That's what these goals are. And here's the thing. I want you guys to be materialistic. What I mean by that is I need you to have some goals that are tangible, right? You like to vacation, right? So next year, a couple years ago, we did this. I learned this. Someone challenged me, right? I challenge you to be on an airplane every month. So next year, my wife and I, that's our goal again, to be on an airplane once a month. That's not that expensive, right? The question is, do you know where to go? Some people say, where am I going to go? Doesn't matter. Put a map, throw a dart, right? Be on an airplane. I mean, if you like to travel, right? Okay. Figure it out. What's your passion? Because part of this is fun, right? What are some of those fun stuff you want to do? Right? Are you a foodie? Right? Yeah. I mean, what is it, right? When I was single, it's cheaper for me to eat out rather than, cook at home, right? So, right? So I find a place to eat at night, either my parents, my sister, restaurant, somewhere else, right? I'm never home, right? So, because it takes so much time to cook, right? Now I cook, right? So again, it's up to you where you're going to spend your time, right? So that's what's fun. Because some people think what they do with their family is fun, but see, can you do this assignment? A lot of people run out of fun stuff when they start after the first couple of pages. That's the reason why I put it last. So if we're here live at Intero Fremont, we're going to do this before we leave today. At least we're going to start it, okay? So this is your motivation. If you don't have a motive to take action, you're just going to be someone who's talking all the time, the mindset, right? You got to walk the talk, right? Okay. Third thing is skills, right? We have to develop the skills to earn the money, right? As a real estate agent, you need to have the knowledge. So that's what skills comes in, right? And number 4 is we need to be taking action. Action, following that schedule that you said. What does your schedule say? 4 things on your schedule. What time you wake up, what time you go to bed. That should be on your schedule. So if I call you, like some people, we've called each other before at 2 o'clock in the morning, right? Because I tell you guys can text me. Don't be surprised if I answer. Now, I'm not waiting for someone's call, okay? I just happen maybe, to be up doing something, right? Like today, I've been up since 2:30 in the morning, right? Because my body woke up. I'm like, should I force myself to go back to sleep? Now, if I'm sleepy, I will, right? Like afternoon naps, I used to have a couch in my office for those type of afternoon naps, like those kids. You remember you guys have kids, right? Afternoon naps, I'm talking about 15, 30 minutes, okay? Not 5 hours, okay? 15, 20 minutes, sometimes some of us have slept in the car, outside, just a quick power nap. And then we're up again instead of putting caffeine. Those things, listen to your body is my point. You got to listen to your body. Of course, be careful what you put into your body, okay? So get off those sugar stuff too much, right? Or coffee, right? Bottom line is you got to be healthy to earn the money, and you got to be healthy to enjoy your money. You don't want to be enjoying your money when you're 60 or 70 on the wheelchair, right? You want to be enjoying your money while you're earning it. Saving also, right? Investing some, but still, you got to enjoy it, right?
Yeah.
You know, we'll be in 3 weeks in Japan, right? I mean, you know, next month. So again, figure it out, right? You know, figure out what your passion is, right? You know, we try to go Atlantic once a year, Pacific another year. Sometimes it's Caribbean, but you know, we try, you know, pass an ocean, right? At least twice a year. So again, besides the local stuff, have you guys ever been a tourist in San Francisco? I know some people feel about San Francisco, you know, Napa, right? We have a lot of touristy area here. Become a tourist in, you know, in Fremont. Just kidding, right? Yeah, right? How many of you guys have ever done that, right? You know, how well do you know the Bay Area? There's so many things here, right? Like a couple of years ago, we stayed in Saratoga, you know, in downtown Saratoga. We took, you know, a weekend, and we were tourists for like 3 days.
Yeah.
Right? There's things you will find in fun stuff, right? You know, I mean, it's up to you. I live in Half Moon Bay now, right? Right? We used to stay at the Ritz, you know, for weekends, right? Now it's like no need anymore. But we still walk to the Ritz once in a while, you know, just to see it, right? Have dinner or something. But again, there's a lot of things to see in the Bay Area, in the United States, right? So you don't have to go around the world, right? But yeah, have you guys ever? One of my goals is to take 12 of my closest friends, right, around the world on a private plane, right? It's budgeted already, right? Now, some of them may not be able to go with us because it's a month-long trip, right? Too bad. I have to find other friends then, right? Right. So yeah, you can apply, right?
We have that right
Right.
here.
But see, here's the thing. You're on my plane, but you got to pay for your hotel. You got to pay for your food. So it's not all expense paid, right? So you got to make sure you have the budget too, right?
That one, you don't need to be like worried about expenses. You can travel already.
Oh yeah, you can do it inexpensively, right? I know people that travel on points, right, on their credit cards, right? I've shared with you guys different things, right? How to get upgrades and all that. But anyways, let me wrap up with how to make money, okay? Basically, it goes down for those 4 things, guys. Okay, what's your mindset? Do you really want to earn X amount of dollars? Do you really want to do that many deals? If you don't know what you're going to do with the money, you're not going to go to work. Most people work to pay their bills. That's it. Right? That's why most Americans, I say Americans, you know, people that live in America, live paycheck to paycheck. Right? Because, you know, as a new agent, you should be working 10, 12 hours a day on your skills, mindset, taking action every day. Because what else do you have? Unless you have kids, right? Unless you have, you know, if you're married, maybe you take care of the house. I don't know. Figure it out. As a full-time agent, you need to have about 8 to 10 hours every week, 50 to 60 hours, 8 to 10 hours a day, you know, 40, 50 hours in a week. So I tell you guys, there's 5 hours every day you must do. 5 hours. Skill building 1 hour, 1 hour market research, 3 hours prospecting. Give me those 5 hours in those 3 activities. Some of you guys are newer, so maybe it's 2 hours, 3 hours in learning. That's okay. Eventually, you're going to need to go out there and meet people, right? And that's the secret to this business. If you're not talking to people, you're not going to do deals. Can we agree?
Yeah.
You got to talk to people, wherever it is. You're putting gas, you see someone, hey, nice car. You know, hey, so what do you do to get that car? Right? Start that conversation. I'm assuming it's a nice car, right? So, okay, start the conversation, right? You got to figure out how to start conversations. So I teach about ABCs, you know, always be in a conversation. Eventually, a real estate conversation. Eventually, a real estate sales conversation. Oscar, my man, you know, I taught him the Costco plan, right? He did a deal from someone he met at Costco, right? I love Costco. I do deals from Costco all the time, or at least I meet them there. It's like, hey, how do you like that power washer? Oh, how do you plan to cook that ribeye? Questions, right? And again, I'm not saying, by the way, you want to buy or sell. No, it's about making a connection. They see my interior shade like Blaze has, right?
Yeah.
Right? He has his name badge. People look you up and down. So look professional when you go to Costco or wherever, the gym, right? Some of you guys have Intero gear. You know, ask me about real estate, put it on the back. We did that a couple years ago. We made shirts, Intero on the front, on the back. Ask me about real estate. Ask me about interest rates.
That literally happened to me last night at my gym. I
Yeah.
was wearing my shirt, and
Mhm.
then I got into a conversation right
Yeah.
before I left. And then
Yeah.
told me that
You never know. Always be in a conversation, right? Because remember, when you go to supermarkets, right? The cashier, guys, we're missing out on a lot of opportunities, okay? So bottom line, ABCs, always be in the conversations. All right, so just remember those 4 things, guys. We talk about that a lot in my training, okay? Mindset, motivation, skills, actions. All those must happen if you want to make a lot of money, okay? So now you've made a lot of money, right? Now you made investments, right? Right? Now let's talk about how to eliminate some of that income legally, right? All right. So you know about Prop 8, 13, and 19 with regards to property taxes. More importantly, on your primary home, and this is where I challenge some of you guys who own your own house, right? Are you taking advantage of that $7,000 homeowner exemption? And I challenge you to send me your address, and I will look it up, and I will confirm if you're doing it or not. You have my number, 510-475-7500. I want to make sure you have the $7,000 homeowner exemption or deduction from your assessment. Number 2, you can ask your title company, or if you have the title app, you can see if you have a homestead filed against your property to protect you in case someone sues you. You don't know what that is, make sure you read that email that I'll be sending this weekend, and you look up the homestead law in California. Okay, only in California. Okay, these are all in California. Okay, that protects you in case you kill somebody and they sue you. They can't leave you penniless. Okay, they have to leave you with a certain amount, and I'll leave it up to you guys to figure that out, what that number is, because then I know you've read the material. Okay, all right. So those 5 things. Now with capital gains, right? We've talked about that. All right, the $250,000, $500,000, right? We know that, right? Yesterday we talked about adding kids to title may or may not be a good idea, right? All right, 1031 exchanges. So there's a website, IPX1031.com, right? Investment Property Exchange, IPX1031.com. To me, it's the best sites. There are some resources there that I'll be sending you guys, so you guys will have their website. Tons of stuff, right? James, there's several people there I know that are pretty good resources. Okay, so all 1031 does is defer taxes, right? Because when we sell, right, do we have profit? Yes. Do we have deductions we can use? In that case, the 250 primarily. Then everything else is taxed at the rate of 20%, up to 20%, up to 13.3, an additional 3.8, right? Right. And if it's an investment property and you don't do a 1031, you have to pay back 25% of your depreciation that you've taken. Okay, so for some of you guys, that's a foreign number. Don't worry about it. We talked about it in other training, but something that you need to talk to your accountant about, or at least read the materials. Okay, because that's some of the things that I talk about on the resources I'll be giving you guys. Okay, depreciation expense, right? So you'll hear about 27.5 years and 39 years. We'll focus on 27.5 years, right? So depreciation is what we call paper loss. So if you buy a rental, you get a rental, you convert your property into rental, whatever the improved value is at the time it becomes a rental, you divide that by 27.5 years, 27.5, you get a yearly deduction. So if you buy a property and the improved value is roughly $270,000, right? It's a $500,000 property, improved value because there's a land value, right? 270,000 divided by 27.5, roughly $10,000, right? So every year you get a $10,000 deduction while it's a rental. It's prorated if you decide if convert it back into rental, into a primary, or you move back in, or you sell it. Okay, but basically you get a $10,000 deduction. That's why my clients who are investors would typically trade every 7 to 10 years, because by that time equity would have increased. They would have more down payment for the next house. Therefore, their next house has a higher depreciation schedule, so they get a bigger deduction. Because eventually I move you from a condo to a single family house to a duplex to a fourplex as far as your investment property. That's the goal, right? Okay. All right. So that's with capital gains. Now, income tax, right? Right. What's the biggest deduction you guys have? Children. Right? Okay. All right. If you have kids, you get an instant deduction, right? No matter, as long as you're dependent, yes? Now, of course, they're expensive, okay? Kids are expensive, right? Okay, we're not talking about that. But at least you can have kids and you can have deductions, right? So we all know that. But a lot of people don't know if your kids is a dependent and typically under 18 and they're legally able to work, you can pay them a salary to help you. I believe it's like around $12,000. Talk to your accountant, and it's tax-free. You deduct it from your income, from your business income, and because it's under the limit, they don't have to file a tax return.
But it's only for
So it's-
children under 18.
Yes, I think it's 18 and they have to be your dependent, right? So again, this is, because they hit a threshold, right? The income, because you guys know that if you earn so much money, you got to pay tax. If you don't have to file a return. Okay, and this one, check with your accountant. Okay, I'm not going to tell you the code and all that. I'm going to give you guys ideas. You asking, Pearl? Or
Now
Mom?
the thing that.
No, it's more than that. Oh, per kid. Yes, that's the initial one. Yes. Okay, yeah. So again,
But hey, Greg,
some people, I don't want kids. My kids are grown up. Again, there are ways to pay somebody and make it part of your deduction, and then it's up to them. But in this case, because it's your kids, they don't have to file. Okay. Again, no limit.
hey, Greg, quick question.
Hold on, Michelle.
Sorry.
What do you mean?
Let's just say you have a house, you have kids, you have.
No. As a real estate agent, I've been telling you guys, as a real estate agent, we have the most deduction that anybody can take. And we'll talk about that. All right. So right now we're just on regular people, right? Right. So we're going to get to the real estate side. Vishal? Question?
Hey, sorry. Quick question. So you mentioned that kid, you can pay 12K and we can get that deduction. But doesn't
Yes.
the kid have to pay taxes on his earning?
If they hit that threshold, right? And I think it's around 12,000 something, right? I think it's
Oh,
higher
okay.
now, right?
Okay.
Okay. I haven't
Interesting.
done this for a while, so I don't know what the limit is, but it's around $12,000 to $14,000 where you pay them. Anything after that, then they have to pay a tax,
Interesting. Thank
Okay.
you.
right? And this is because part of it is because they're your child. Okay. If you hire, someone else, they have to pay tax. All right. But this is because
Right.
it's your child. Okay.
But
Yeah. Family. Okay.
is
Yeah.
there a
Aunt
minimum
and uncle don't
age?
count.
Is there a minimum age for that, like for the child?
You have to be legally be able to. Okay. If you're gonna pay your 1-year-old to put out flyers, right? It doesn't work.
That's
Okay.
not-
So the IRS knows how old your kids are, right?
Yep,
Okay, Vishal?
that's right.
Okay, it has to be the same thing as you would pay somebody else, right? Right now, the minimum wage in California is,
16.
yeah, 15, 16 bucks. I don't know what it is, right? Unless you have 20 employees or more and you have fast food restaurant, right? Whatever, right? Figure that out. Talk to your accountant, okay?
Yep.
Find
Thank
out,
you.
hey, ask this question. How much do I have to pay my kids so that way, I could get a deduction and they don't have to pay tax? Ask that question.
Yep.
Ask
Thank you.
GPT, right? All right.
12,400.
Yeah, $12,450. Thank you, Parul, right?
Sure.
Limit, yeah, that's your cap, right?
All your whole family, right?
Yeah. Okay, so again, no, that's per child.
Oh, that's per child.
Yeah, look it up. Okay. So don't be adopting anyone, okay, Parul? Right? All right. So, all right. Remember, guys, when you have a deduction, all that means is you have a lot of income, right? And you want to reduce the tax you pay, right? It's not for free. Okay, you still have to pay it out. Okay. So instead of paying your kids, giving your kids an allowance, or maybe this would be their bonus, or maybe this would be their income, right? So again, figure that out, right? And there's a way to do it where you pay their parents and the parents pay them. Okay, so there's a way. That's talk to your accountant about it, or talk to me offline when you have kids.
All
right. So let's say you don't have kids, Parul, but your neighbor has kids, right? So you want to hire the kids, right? So basically, you pay the parents, and the parents will do the deductions, and the kids don't file the return. So it's a three-way thing. But again, talk to your accountant about that. I'm not gonna, tell you, you should do that. Okay, but there is a way. Possibly. All right. Again, it's a lot of work to do certain things. Okay, it's not, maybe that'd be worth to do it, right? Because again, if you get audited, is it a true story what you're telling me? You got to survive that audit, and when you get audited, it's potentially penalties, interest, jail time. And you don't want that, right? Remember,
It's either or altogether.
could be all. Pick one or pick all, right? Depends how severe it is, right?
I didn't.
Right? It's like,
do that.
I didn't know you had kids, Blaze, and you're claiming, 10 kids, yeah, again. So again, I just understand. Okay, all right, so what else, right? How many of you guys have an HSA? Huh? Right? You're at your, what? Yeah. Health savings account, right? Okay, there's different types, but that is one thing you guys should have, especially as you get older, right? It's a savings account. It's a deduction. You can invest that money, right? It's a deduction. So think about that, okay?
So we can also set up one for ourselves.
Yes. Okay, right? So talk to your accountant about it, okay? I'm not an accountant. I'm not giving legal or tax advice. I'm giving you ideas. So think about it, HSA, right? It's a good thing, okay? Because it's a good deduction, okay? It lessens your income. All right, and you can invest it. So if it makes money, it's tax-free. Did you know that? Okay. Because you invest that money. Okay, so talk to your account. ChatGPT. To learn a little bit more. Okay, all right. So what else, right? So as a normal person, there are other deductions, right? Okay, so now let's talk about, we know as a real estate investor what we can deduct, right? Expenses on our rentals, yes? We got that, right? For our primary, secondary, we know what we can deduct, right? We've talked about that. All right. Yes, hold on, here first. 401k is another one. Unless you have an LLC or a Chapter S, a corporation, we have what we call a SEP IRA, a self-directed IRA, right? That's what we have, right? It's not a 401k. We want to have that. We don't unless you incorporate. Okay. So talk to your accountant about having a retirement account. Okay. My retirement account, I have that, but my retirement account is the rentals I buy, properties I buy. Because to me, that gives me the biggest deductions and growth, right?
Right.
Right, okay.
So let's say you have a investment company or a company,
Hmm.
and we do work on it instead of hiring a vendor.
Hmm.
Would you deduct?
Okay, no. You can't pay yourself, right? Technically, unless it's a corporation. So if you decide to mow your rental, you can't charge your corporation $50.
Or
Right.
unless it's a stock.
Right.
And we-
Again, work you do, you don't get paid for it. Got it? Work you do, you don't get paid for it. And guess what? If you do it, isn't that the cheapest that you would pay? That's why you're doing it. Why? Pay someone else, right? For the work. Again, do you have the income to deduct it from? But if you don't, then yeah, you do it. You paint the house yourself, right? All right, okay. All right, so now let's go to as a real estate agent, right? This is the fun part now. What can you deduct, right? Two words, ordinary and necessary. Okay, if it's ordinary and necessary for your business, you can deduct it. Clear? All right, so we're gonna have some pop quizzes here, right? Like what is ordinary and what's necessary? All right. You guys got into real estate, right? Okay. Yeah, because you guys here, right? You can't deduct your education to get into the business. Just like someone can't deduct their PhD, their bachelor's degree, right? Just to get into the industry, right? You can't. Right.
So
I want a question in the back first.
for like schooling and stuff, like if you go the corporate route, you can deduct your.
We'll talk about that.
Okay.
Okay. So what got you into the business, you can't deduct. Right? But you can, like your initial DRE, right? You can deduct those. Okay. What you do after your license, you can deduct. Got it? Okay.
So if I travel here, I'm licensed now, that's deductible or not?
No. Okay. So education to get in, not deductible. Education after, it's deductible. So two of your biggest deductions should be education, training, and marketing. That should be your two biggest ones, okay? For me, it was. More than half my income my first couple years was there. Why? Because I made it fun. Okay, all right? Before we didn't have the internet, so in order for me to learn, I either buy stuff or go somewhere, right? We have to travel. So therefore, our traveling expenses are more, right? So now let's have some fun, right? All right, so what do we spend on a daily basis, right? We have your car, right? So with your car, you typically can either go a per mile or what we call actual, where you take the full cost and you determine how much would be business and how much is personal. We're not going to do that here. I'm going to leave it up to you, talk to your accountant and do the analysis for that, okay? Because for some people, doing the per mile makes sense because their car is paid off, it's less, right? Rather than, if you decide to lease, what, the Tesla truck, right? It's an expensive car. I mean, your payments will be higher. So maybe actual is best. The key with cars, you have to determine how much was business and how much was personal, right? Business must be 51% of your miles. Yeah, we're gonna talk about what business miles are, but it has to be 51% unless you're doing the per mileage. Okay, then it doesn't matter what the math is. But if you're doing actual, you must have a business car, and how you do that is you have to use it more than 51% of the time, and most of us use it 60-70% of the time. How do you deduct 140% of a car? Having two business vehicles, right? Because you can deduct 70%, 70%. Got it? Now, you got to be able to keep track of your mileage. And there's many apps out there that will keep track of your business mileage. I use Mile IQ, okay? If you use QuickBooks or some of those tax-related apps, they will keep track, you just got to make sure your mapping is on, right? Your tracking is on, right? So they know where you are. And then you just say, business, personal, right? Okay. Commute miles from here to your office doesn't count. My drive from Half Moon Bay to here is commute. Unless I meet a client or go to a different office between. So I go to Union City, that's my commute, right? From Union City to here, that's business. Got it? So what you want to do is your first stop or your last, or before you go home, last stop before you go home, should be something business related. So hopefully something close to your house. Okay? So that way you shorten your commute. But if you're commuting from Tracy to here, that's commute. Now, understand this, okay? We'll talk about offline what commuting is, okay? So I'm gonna give you some ideas, but understand this, that's commute. Commute doesn't count, got it? So business to business counts. So figure out what your business mileage is going to be, right? And again, there's different ways to track that, right? You should have a beginning mile at January 1st, an ending mile December 31st. You only have to keep track 3 months. 3 months multiplied by 4 equals your total percentage for the year. You don't have to do the whole year. But you got to make sure it's the same time every year in case you get audited. So any quarter, any 3 months. So if you're going to say, I'm going to track between April and June, then you use that mileage. You still have the beginning and end, but to average out for the whole year, you have a percentage here. Okay? Okay? More questions, we'll talk about it later, okay? So for those of you guys who followed it, great. Okay. There's a recording I did on Moxie about this and also on our YouTube channel, okay? Plus you guys will get this part. Okay, so that's the car, okay? Actual or per mile, one of the two. Now, what's your other biggest expense as a real estate agent? Yeah, marketing, right? Marketing. Marketing is broad, right? Could be your MLS, right? Your flyers, right? Your Intero shirt, your name badge, right?
Right.
Yeah. I have like 30 Intero shirts. Uniforms are tax deductible. Yeah, someone said, Greg, you don't, how come you have the same shirt? I didn't go home yet, right? Yeah. So again, it's that. It's, it has to be a uniform. So if John said, hey, how can I deduct my suit, right? Well, you gotta put Intero permanent. You can't just put a name badge. Yeah, that'll be your listing presentation jacket suit, right? Okay. Now women, it's a little bit more challenging, right? Right. Now someone says, oh, it's an Intero Gucci purse. It got devalued, right? Okay. What? Right. Okay. So again, if it has real estate, your name, it's marketing, right? All right, so we'll have some ideas on how to deduct that Gucci purse, Parul, okay? All right, so, yes,
It doesn't have to be
your name,
a logo.
yeah, it could be your logo, yeah, it could be your name, as long as it says real estate on it, or realtor, right? You can't have your daughter's name, okay? Right, it has to be marketing. You're marketing yourself, right?
Realtor's daughter.
Yeah, call my mom about real estate.
There you go.
I had that before. Then my nieces followed. Call my uncle. Now it's good. Call grandpa about real estate. Okay, you give them shirts, right? I say, hey, you wear this, a couple times a year. We'll take you to Disneyland, right? Whatever, right? Okay, the shirts are basically tax deductible, right? Then whatever else you do. Okay, okay. So marketing should be pretty easy, right? If you pay for staging, if you do a broker tour, you serve food, right? Marketing is easy, right? All right. Let's talk about meals, right? Because some people say, hey, I take my clients to meals all the time, right? Is it a business meal or is it a personal meal? All right. If you take your clients out for a celebratory meal, you get a $25 reduction, right? But if it's a business meal, you can deduct the full amount. So how do you make it a business meal? Well, the purpose of the meal has to be business. So when you call them and say, hey, Divya, I'd like to take you and your husband for dinner, to celebrate the sale. That's not marketing. Hey, Divya, I have a couple of properties I'd like you guys to consider as a rental. Since you bought your first home with me, when can we have dinner? Now it's a business meeting, right? Of course, it has to be a table, right? Okay. So we can conduct business. And it doesn't have to be like all 3 hours is business, right? But the purpose of the meeting was business. Got it?
But,
So
but,
if
but-
you meet with somebody and you ask them for those,
Again, what was the purpose when you called them, right? When you invited them to coffee, what was the premise? Hey, I'd like to talk to you about business. Or, hey, let's catch up. I haven't seen you. That's two different things. One's to catch up, one's to talk about business. Got it? All right. Okay. Because again, you have to survive the audit. If she deducts that coffee and she gets away with it, then she gets away with it. Right?
I was just gonna ask.
Right? How many people are in the United States? Over 300 million. So what's your chances? Who knows? I've been through the two. I've been good so far. I'm still here. Right? So,
100% though, right?
huh?
100%.
Right now it's 100% until 2026. Right? Because they brought it back in 2018. Right? Depends who the president is going to be. All right. So that's one of the biggest things that we have, right? Because we spend money on food, right? Again, IRS says you must eat 3 times a day, right? That's not deductible. Okay. Unless there's a business meal, right? Right. Why do you think we feed you guys at meetings? Because this is tax deduction.
Yeah.
It's kidding. Yeah.
Yes, sir.
So, right? So yeah, like the president, right? All the meals he eats is tax deductible by the White House, right? Or whoever's throwing that party for him, right? So again, just know meals, we got to be careful. Okay. Gifts, right? I want to give John a refrigerator for buying a house. That's a gift, $75. But it's a $5,000 fridge. Now I need to convert it into a marketing. How do you convert it to a marketing? Put it terrible. Get rid of the LG. Put it terrible. No. When what was the premise? No, you can't put a magnet. What was the premise when you said, hey, John, when you buy a house through me, I'll buy the fridge. Marketing. Got it? It's not a gift. Got it? Okay. Again, talk to your accountant to clarify, right? But again, make it into a marketing, right? Just like now it's pumpkin season, right? We give away pumpkins, right? Tax deduction because it's for marketing, right? There's a lot of stuff you can do. Marketing is very broad. Is it something that will generate you business or hope in generating business? Are we clear on marketing? Any questions on marketing? Yeah, because it was something that I promised him if he buys through me, that's what he'll get. Or better yet, just pay for their closing costs. Instead of a refrigerator. To me, that's easier.
And
That's deduction. Because you never received the money. Got it? Okay, got it? Okay. So If you guys have something like that, pay for closing costs, check with the lender, check with your broker, right? All right. So marketing, if you guys think of anything you want to market, okay, someone asked me, how do I deduct my perm, my makeup, right? So, all right. So Blaze asked me this yesterday, right? Just kidding. All right. So how do I deduct my makeup and my nail polish, right? Okay, you can't deduct it every time. But if it was necessary for me to have a photo shoot for my marketing, you can deduct. Got it? Okay. If it's ordinary and necessary, it's not ordinary that a realtor should have polished nails, right? But it is necessary for my photo shoot, correct? And if I happen to need a Gucci purse, as long as that Gucci purse is everywhere that I market, right? It could potentially be a marketing tool. So it could be if you're the Gucci lady, that could be a deduction, right? Okay. Again, when the IRS sees it, they sees it as a deduction. They don't know it's a Gucci, but they'll know the amounts. So they know the amounts, okay? So that's where you do actual instead of a per mileage on your car. Two different things, okay? Yeah, or you can do car wash. You can deduct it if you're doing the actual method compared to the per mile method, okay? Right? The standard deduction, two separate things.
Any
Okay.
kind of car wash even includes your stuff.
No, you can't deduct your stuff, but you can deduct the materials you use, but not your labor. Okay, that's why, don't do stuff, hire somebody. Yeah? I never mowed my lawn. I always hired somebody, right? It's time and, it's an easy deduction, right? So again, you hire someone that can do it for cheaper, right? Or even more as long as it's a deduction for you, right? All right, so as far as, what do you call that? Marketing, we're clear, right? Okay. So if you have to do up your hair, as part of your photo shoot, hey, right? Okay. I don't know, how often do you do a photo shoot? Once a month? Once a month? Again, deduct what you want and can talk to your accountant and survive the audit, right? It doesn't say you can only have, 10 photo shoots, okay? It doesn't say that. It says this is what you can do. Up to you now. All right. Education. How about education, right? So anything education after you got licensed is deductible. Some of us get certifications, right? CRS, right? CNE, right? Okay. Whatever it is, right? Well, are you paying for this?
No.
You're not paying for this, right? So I should charge you now, right? So again, any education. So if you take now, I want to get my PhD in real estate. Now I want to go to school, right? Unless you're going to use that specifically, it's not deductible because that's anyone else. Because the class you're going to be taking is a general. It's not just real estate, right? But if you decide to take you want to become more on commercial, you get the CCIM designation, or you want to be a negotiation expert, right? Those type of things are deductible because those classes, those certifications are specific to real estate, to your career. Clear? Okay. All right. So if you have questions on what I can deduct, just ask me, okay? Text me, right? And we can talk about it. Bottom line is it ordinary or necessary? Ordinary means it's something that everybody does. Necessary means it's something I have to do, all right? All right, so education, right? Talk about that. Now, here's the biggest thing I really want you guys to focus on is what I call your research trips or your educational travel, right? Okay. Don't take a CE course in Pleasanton. Take a CE course in LA, right? Okay, because the trip will be deductible, right? As far as your flights or your drive, whatever, right?
Right.
Now, the IRS says they will allow you one business travel day on each side of your trip. So if the event is Tuesday through Thursday, right? Monday would be a travel day. Friday will be a travel day. What you want to do is to have events that end on Friday or that starts on Monday. So that way your travel day is the Friday before or the Monday after. which means that you have weekends sandwiched in, which means those weekends now could potentially be tax deductible, right? Now, of course, you have to pay for the hotel. Tax deduction means you're saving 30, 40%. That's all it means, right? Okay, it's not free, right? Because you have to take it out of your pocket, right? It's a deduction. Now, what's a work day? You have to work at least 4 hours of that day, okay? If it's international, don't even get involved because you have to work 8 hours per day, okay? And the whole trip has to be just business. You can't sandwich in those 2 weekends. Got it? Okay. So like most of us that take Mike Ferry, some of us stay there 9, 10 days. Some of us stay 5 days because it's Monday through Friday, the event. So we can travel the Friday or Monday after, right? Or somewhere in between. Okay. So just remember that you get 1 travel day. You don't have to, if it ends today at 1 o'clock, you can still travel tomorrow. You don't have to leave today. Okay. So if you leave tomorrow night, you actually have about 24 hours to have fun, right? Got it? Okay. So that's your travel. Okay. Now, when we do seminars, or sometimes when I go here, sometimes I grab a hotel, right? Because it's too late, I'm tired, sleep there, right? Sometimes call mom, sister, you know, it's easier, whatever, right? Yeah, that's business. Okay. So there are ways where, let's say there's a Tom Ferry event thing next month, you can get a hotel there. All right. And that would be a tax deductible, you know, trip for the hotel. Meals with agents, technically not deductible unless it's a business meeting. So how do you convert that meeting? We're in a business meeting with a Tom Ferry event, right? Do we talk about the event? Yeah. So you know, we go Dutch, you know, that's, you can deduct your meal. Got it? Can you eat by yourself? No. Because how can you have a business meeting by yourself? Doesn't work. Oh, but I'm talking to the escrow company. Doesn't matter. That's not, you know, it has to be a table. We're talking, right? Clear? Right? Again, it's up to you what you want to deduct. So that's meals, right? Any meals you use for marketing, tax deductible, right? I see smart waters, right? Okay. If you didn't deduct that, it's not smart. Okay. You can deduct smart waters, right? How? Make it into marketing. So we'll talk about that offline after. So what else, right? What else? Does anybody have any ideas on what they can or cannot do? iPhone, right?
MacBook.
Okay.
Or
How much of that is business? Is it ordinary or necessary? If it's necessary, you can deduct the whole amount, right? Right? Yeah. Right. So some of it you have to capitalize at some point. Some of them you can just deduct all the way. Talk to your accountant, right? You can expense the bills, some internet at your home because you do work from home, right? I don't recommend deducting, you know, your housing, right? Your home office. It just gets messy. But talk to your accountant if they suggest that. Most of them will not, because technically you guys have an office to go to, right? Unless you're meeting clients there, you know, it might open you up to potential audit, right? Or at least, yes, we talk about car payments. You can either do the car expenses, car wash, oil change, actual, or you can do a per mileage. It's up to you.
But not the actual payment.
Well, you can, yes, the portion of the business. So if your business mileage for the year is 60%, you can deduct 60% of your payment. Okay, but you remember you have to keep track of your mileage and all that stuff. Okay. All right, stamps, marketing, right? Mailing, right? That's marketing. See, marketing and education is very broad, right? Now you have to think about how can I make it ordinary and necessary. Postage, yeah, all the time, right? We do this note cards, right? These Intero note cards, right? I don't buy Hallmark cards anymore, but I do research in Hallmark.com to see what to write. Right? Okay? Right? Okay? Right? Okay? So again, you know, don't spend $5. You know, this is free to us, right? It's here in the office. Just write it out, right? Okay. Again, you know, whenever you meet someone, hey, it was a pleasure meeting you yesterday. You know, please reach out to me should you have any questions about real estate. Mail it out. You should be sending out 5 of these a day. You should, you know, me, 10 to 25 a day is the goal, right? That means you're meeting how many people a day, right? You talk to 50 people a day, you should get 5 to 10 names. Where do you find 50 people? They're out there. Right? Again, what else do you do every day? What else are you doing all day long? Right? Okay. Professional fees. You pay a landscaper to do your marketing. You pay your CPA. Yeah, those are all tax deductible. Professional fees, right? You pay for staging, tax deductible. Marketing, right? What else? What other expense do you guys have that you'd like to deduct? Zoom roll. I'm gonna look at the notes. Anything? All right. Okay. All right. Yes, you guys will get the things that you guys were supposed to be seeing today, the slides. Okay, so you guys will get that. Just in case I don't get everybody, because I'm not sending this to all the entire company. I'm only sending it to the people that I see. Right. So instead of doing this, please text me. Please send me the stuff. Okay. Right. Send me your contact info. Right. Okay. So I'm gonna stop the recording here. Questions?
How about the card? I need a special card or just